So let's dive into a really fascinating story happening inside one of India's biggest names, the Tata Group. It's a tale of two siblings, two IT powerhouses. You've got Tata Consultancy Services, or TCS, and Tata Elxsi. They share the same famous last name, but wow, their recent journeys could not be more different. Let's get right into it. So on one side, you've got TCS, the absolute giant of the industry. I mean, think of this huge, stable empire with a massive global reach. And then, on the other side, you have Tata Elxsi, the nimble design and tech specialist. They're known for being experts in these very specific high-growth areas. It's kind of like comparing a massive all-weather aircraft carrier to a quick, specialized speedboat. But they both fly the same Tata flag. And here's where it gets really interesting. Look at how the market is treating them. The whole IT sector has been showing some signs of life, right? And investors have rewarded TCS with a pretty solid 12% gain this year. But Tata Elxsi? Its stock has been sent tumbling by 22%. That contrast right there, well, it creates a real puzzle for us to solve today. And that huge difference on the chart, it just begs the question we're digging into in this explainer. What in the world is going on here? What do their strategies, their recent numbers, and their big bets for the future tell us about why one is climbing while the other one's taking a hit? Okay, to really understand the split, we've got to start by looking at their latest report cards. The numbers from the second quarter, they give us our first big clues. So at first glance, things look pretty decent for both of them. Revenue is up for TCS and for Tata Elxsi. But the devil is always in the details. First, just look at the massive difference in scale. TCS's revenue is over 70 times larger. That's a whole different universe. And then check out the net profit trend. TCS actually saw its profit dip by over 5%, while Tata Elxsi's profit grew by more than 7%. Now that's a really telling difference. But underneath that huge revenue number for TCS, a really dramatic story is playing out. The company's total number of employees dropped by nearly 20,000 people in a single quarter. That is a huge reduction, way bigger than the 12,000 layoffs the company had first talked about. And this brings us to the human side of those numbers. An employee union has come out and said that they believe the company is deliberately lowballing the scale of these exits. They claim thousands more were basically forced into leaving through what they're calling coercive separation practices. This just adds a whole other complicated layer to the TCS story this quarter. All right, now let's switch gears and turn our attention over to the specialist, Tata Elxsi. To really get their story, you have to look at where their money comes from, because that's where you'll find both the big opportunities and their current headaches. This pie chart tells you almost everything you need to know. A massive 55.8%, more than half of Tata Elxsi's business comes from just one area, transportation. This deep focus on the auto industry makes them a super specialized player, for sure, but it also means their fate is pretty tightly tied to the ups and downs of that single market. And right now, that core business is hitting a few speed bumps. Growth in their biggest segment was almost totally flat, at less than 1%. Now, part of this was because one of their top auto clients had a major cybersecurity issue, which put the brakes on a bunch of new projects. But even with that slowdown, the company's leadership is projecting a lot of confidence. The CEO, Manoj Raghavan, came out and said he expects a much stronger second half of the year. He's even forecasting a return to double-digit growth for that transportation business next year, all thanks to a really strong pipeline of new deals. So this is a really crucial piece of their strategy. They've made this fundamental pivot. For years, their main clients were the Tier 1 auto part suppliers, the companies that make the components. But now, they've shifted their focus to working directly with the big car companies themselves, the OEMs. And those partnerships with the big brands now make up 70% of their revenue, which gives them a lot more stability and a direct line to the biggest trends in the industry.
Okay, so now let's swing back to the giant, TCS. While Tata Elxsi is navigating those sector-specific headwinds, TCS is making an absolutely colossal bet on the future of tech itself.
And this is not a subtle shift, folks. This is a public declaration of war. The CEO, K. Krithivasan, has put a stake in the ground, and he's made their ambition crystal clear: to make TCS the #1 AI-led tech services company in the world. They're not just adapting to AI, they are gunning for total domination. And this is not just talk. They are backing this vision up with a truly eye-watering amount of cash. We're talking about a planned investment of over $6.5 billion.
So, where is all that money going? Into building a massive 1 gigawatt capacity AI data center. And get this, it's going to be entirely hosted in India. This move is designed to make TCS not just a service company, but a core infrastructure player in the global AI race. It's a huge statement.
So, all of this brings us to the core dilemma, which is really a clash of two very different philosophies. You've got two completely different stories and strategies, and that creates a classic choice for investors, and even for employees. On one side of the argument, you've got the case for stability. As one expert puts it, TCS is simply the safer bet. It's like a fortress with a proven pipeline, it's great at execution, and it has stronger profit margins. It's the blue chip choice, plain and simple. But then you've got the other side of the coin. Some analysts prefer Tata Elxsi. They're betting that once its key sectors get back on their feet, its super focused, specialized model could deliver much higher growth and actually outperform the giant in the long run.
And this is what it all boils down to, right? It's all about your personal tolerance for risk. Are you looking for the safety and the steady returns of a huge established empire like TCS? Or are you willing to take on the higher risk that comes with a specialist like Tata Elxsi, all for the chance of a much bigger payoff down the road?
And look, this isn't just some theoretical debate for people on Wall Street. This slide shows a real post from a new graduate who got job offers from both companies for the exact same salary. They are facing the exact same dilemma. Take the stable path as an assistant system engineer at TCS, or go for the more specialized junior developer role at Tata Elxsi. So, we'll leave you with that question to think about. Whether you're putting your money or your career on the line, the choice is the same. Do you bet on the stable, powerful empire that's making this massive pivot to AI? Or do you bet on the agile, focused specialist that seems ready for a rebound? Which path would you choose?